Hey everyone, thanks for being here for our first time home buyer webinar today. Just as a quick reminder, we have monthly webinars available through our team for a variety of different audiences. So we have our first time home buyer webinar, our repeat buyer webinar, and then also some fun industry update webinars for our real estate professionals. So hopefully you are here in the right place as a first time home buyer looking to learn a little bit more about the mortgage process. This will be about a 30-minute webinar. Our contact information is right here on the front screen. Any questions that you have, just feel free to give us a call, an email. You can also put questions in the chat box. As a reminder, as a first-time home buyer, we do offer a $250 closing cost credit for attending this webinar. So just make sure that myself or anybody on my team you work with knows that you're here. And as long as you find a house and get a mortgage with us within the next year, this is a promotion that we have going on for 2024. Feel free to pass this along, of course, to anybody else you know who might be interested in buying a house this year. We'd love to help them too. So before we dive into just the way that the process works when you want to get pre-approved for a mortgage, I want to do a quick overview of the market for you. So some people have started off saying that 2024 is going to be the year of the fives, and nobody has a crystal ball. Some of these predictions might already be off just a couple months into 2024, but industry experts were saying that we may see mortgage rates drop into the fives, which would be nice. They're thinking that more houses are going to sell this year than last year, maybe as many as 5 million houses. So that's good news for more inventory. And that house values are going to continue to appreciate. So that's good news if you own a home. That means the value is going to continue to rise. While you're looking for a home, just something to keep in mind that you've probably noticed that housing prices continue to go up. So the sooner you can buy, the sooner you can start taking advantage of owning that home and gaining that appreciated value. This chart here just gives you an idea. Of course, when it comes to the mortgage side of things, you want to be aware of interest rates and have an idea of what rate you may end up with when you actually buy the house. You can see this chart goes all the way back to 1980 through the end of January of this year. And rates are always moving up and down, up and down. You can see that way back in the 80s, rates were all the way up over 15%. And then in the more recent decades have been, between 5 to 10% was kind of normal. We had from about 2010 to 2021 where rates were abnormally low, under 5%. And now they've kind of returned back to those more normal between 6, 7, 8%, sort of in that range. Will rates come back down to the 5% like some people are predicting? I hope so. That was also the prediction for 2023. And, rates kind of stayed in that 6, 7, 8% range. So I just wrap your brain around, like that 7% median where rates have sort of been, at least while you're getting started. And some other things to keep an eye on in the news. There are headlines, of course, about recessions, what's going on, what's the Federal Reserve doing. So I just wanted to pull these charts here to show you that a recession is not necessarily a bad thing for the housing industry and for mortgage rates. In fact, inflationary times that we've been in most recently, that is actually problematic in some ways for the housing market. So what you want to hear on the news is you want to hear that inflation is coming under control. And if the economy is not doing that well, if we are in a bit of a recession, that's okay. That doesn't mean the housing market is going to crash. We have way too little inventory and way too high of demand for a housing crash to happen right now. So you can see that during recessions, housing prices generally don't fall. Of course, 2008 was the exception because that was a housing related recession, but otherwise housing prices actually increased during some of the more recent recessions. And historically, recessions also have meant falling mortgage rates. So when we're in recessionary times, generally speaking, the Federal Reserve reduces their rates, which makes lending a little bit easier in general, and eventually mortgage rates fall as well. So we'll see what 2024 has in store for us. As far as the process to get pre-approved and when you want to buy a house, today we're really going to kind of run through this roadmap. If you want a copy of this, just feel free again to email us. We can send that over. But we're going to mostly focus on your side of the puzzle, getting pre-approved for a mortgage so that you're ready to go house searching with your realtor, and then ultimately get a house under contract and own the home. The most important piece of the puzzle is to establish a local and experienced team. So when you're working on buying a house, you are going to be working with a loan officer, a real estate agent, home inspector, attorney, insurance agent. Maybe you may need to involve or want to involve other people that help you with your finances, like your tax accountant or your financial planner. Depending on the property you're buying, you may also want to have some contacts for home repairs too. We also keep an eye on and a pulse on what's going on with other local resources to help with down payment assistance and grant programs. So when you work with your loan officer, if you're eligible for anything like that that we are aware of, we'll let you know. And there are certainly places that can help you locally to your area figure out what assistance programs may be available. Some are through organizations, some are through cities, some are through states. So it really depends on where you're looking. Getting pre-approved is really important because you need to be pre-approved in order to actually submit an offer on a house. So that's really step one. A lot of times as step one, people start looking at houses because that's the fun part, right? You start browsing online. You're probably not thinking, oh, how do I get all my finances in order? And I really want to talk about a 30-year mortgage that I'm going to have to pay back. No, you want to look at the houses, and that's the fun part. But in order to actually figure out what budget you should be looking in, what you're qualified to do, you want to actually talk to a lender first, figure out what you're pre-approved to do, and then go out house searching. You'll hear the terms pre-approval and pre-qualification kind of used interchangeably, but there actually is a difference. Pre-qualification is usually just more of an informal estimate of what you might be able to do. There's some online places you can just plug your information in. You know, that's really not reliable. You want to have a pre-approval, which means you've actually spoken to a loan officer and they've reviewed your credit, they've reviewed your financials, and done all of the kind of background automated underwriting system reviews that we do. At that point, you're able to show your realtor that you're ready to go. And a seller is also going to want to see your pre-approval letter when you go to make an offer. So all of this due diligence happens in the beginning of the process, and then you're ready to go out house searching. And when the time comes, get under contract on a house and have a smooth experience through to actually owning the home. Your lender throughout this process is going to complete a thorough mortgage consultation where we review your goals and your financials and your budget. And then we're going to align your goals and your financials with the mortgage program that fits your needs. That's what we're doing when we say completing a pre-approval. From there, while you're house searching, we are here with you, just like your realtor is, to help you stay updated on any industry trends that are happening, help you with any updated budgets or questions that you have if your goals change at all. And then when the time comes and you have a house actually under contract, we are going to complete that formal mortgage application with you and communicate with all the other parties involved so that we can actually get you to close on time. And then we don't just stop there. After the closing, we continue to keep in touch with you and provide you with tools that will help you with your homeownership experience. We also do annual mortgage reviews where we'll check in and just make sure that everything still fits right as far as your house and your mortgage. Mortgage consultation, that's what we call our very first conversation that we have. So whether you find us online or email or come in or talk on the phone, whatever it is, the most common is a phone call or a Zoom call. We will go through with you again your goals, and then also we'll review your financials. So it's helpful if you can start gathering or have access to physically or online your income documents, your asset information, and then we will actually take a peek at your credit history. So for income, most commonly we're looking at pay stubs, W-2s, tax returns, right? These are just some typical items. For assets, it'll be your bank statements, or if you have other funds available, maybe gifts from relatives or retirement accounts or whatever, having those kind of accessible and just knowing what you have available is helpful. Credit history and credit scores, a lot of people have questions about this because it always feels like kind of an unknown thing. You can actually access your own credit report online from annualcreditreport.com. So check that out if you haven't. It'll give you your actual TransUnion, Equifax, and Experian. Those are the 3 credit bureaus. It'll give you that information so that at least you can have an idea going into home buying what your credit looks like. And again, your lender is going to review your credit with you anyway. Ideally, you want to be 780 or above on your credit scores. It's kind of like SAT scores, right? You want to be as close to 800 as possible, but there are plenty of programs that go down into the 600s as well. And you can also look for local resources on credit counseling. We've got one here. I'm out in Western Mass, so in my area, Valley CDC is a great resource. There's Wayfinders too. There's, different housing authorities that are local here. So many of those have housing counseling and credit counseling that would be helpful. Your credit scores are primarily impacted by, of course, your payment history. So anything that reports to the credit bureau, like credit cards, student loans, car loans, personal loans, mortgages, you want to make sure you've paid them on time, especially in the most recent 12 months. And then the next biggest impact on credit scores would be how much you owe, right? Especially when you're talking about revolving accounts, which mean credit cards. You'll have a credit limit on your credit card, and ideally you want the balance to be low. Like some people say under 20% of the credit limit is ideal. So if you have a credit card and the credit limit is, $1,000, you really don't want to be charging it all the way up to $1,000. You want to keep it at maybe like $200, pay it off, $200, pay it off, right? So that you're keeping the balance low. Length of credit history, you really can't control, right? If you're on the younger side and you just open some accounts, that is what it is. But the credit algorithms do like to see that your credit has been open for a long time. So don't close accounts. That's another thing that people oftentimes say, oh, well, I paid and I closed all my accounts. And that actually can sometimes harm your credit scores because the credit scoring algorithms want to see that you have a lengthy establishment of credit. So credit cards you have, pay them down to 0 is great, but actually keep them open. The scoring algorithms don't like to see that you have new credit. So try to just establish credit and then keep it the same. And then they're also kind of gauging your credit mix, which means, do you have a good mix of different types of debt, like credit cards, car loans, right? Different things to manage. Once we've reviewed your financials and we've reviewed your credit history, we're also going to look at the different mortgage programs that we have available. So when you work with a lender like us, we have a variety of different programs, a variety of different terms that are available. We're looking at about 35 different mortgage programs and different terms and assessing what will help you achieve your goals, right? Based on your financial profile as a buyer and the mortgage guidelines, and then the budget you're looking for, what's going to help you achieve that goal. So that's our job. And sometimes it might be that there's only one option that's going to work for you. And other times there may be a few different ones to compare. So we can talk about the pros and cons there. Once you're actually under contract on a property, that's when you can go ahead and lock your interest rate in. So when we're doing the pre-approval initially, we're going to tell you where rates are right now, and that's what we're going to base your budget on. But while you're house searching, rates again go up and down every day. So we can check in and keep you updated on where the market's going. Generally, there are not extremely drastic changes. I mean, you can see there is volatility, right? All of these up and downs on this chart. But you're probably talking like within 1/4 to 0.5% if you're looking over a couple of months period. So once you're actually under contract, that's when you can protect the rate. You can stop it from changing. That's called locking in the interest rate. And once you lock in, you can't get a lower rate if rates come down. That's the only downside. But the benefit of locking in is that if rates go up, you're protected. So you don't have to worry while you're under contract waiting to buy that house. You don't have to worry about rates changing. So this is something we discuss once you have a property under contract, and we'll also review it as a part of your pre-approval process. A sample budget. So this is based on, again, I'm out here in Western Massachusetts in Hampshire County. Our home prices median recently is around 425,000. So this is just a sample budget. If you've never seen what a mortgage budget looks like, here it is right in front of you. So this is at 425. This is with a 15% down payment. So your down payment is how much money you are actually paying toward that $425,000 house. The rest of it you will be borrowing on your mortgage. That's your loan amount. So you don't have to be able to put 15% down. This is just an illustration to show you what it might look like. And again, this was put together back in January on the 27th. So these are the rates and terms and everything from that time. And the mortgage payment, so the part that's highlighted in this pink color, that's going to include the principal and interest that you actually pay back on your mortgage, just like with any car loan or student loan you have, right? You're paying that monthly payment. And then it's also going to include your homeowners insurance. You would set up your homeowners insurance on your own, and then we use whatever amount the homeowners insurance costs gets divided into your monthly payment. Real estate taxes, that comes from the town or the city. Mortgage insurance, PMI. Mortgage insurance is required on most programs whenever you're doing less than 20% down. There's typically some kind of mortgage insurance that you'll pay. So the total monthly payment listed here, $3,113. And in addition to the monthly payment and making sure that part of the budget is comfortable, you also want to keep in mind that you'll have the down payment that we talked about. That's how much money is going toward the purchase of the house. Plus, there's also closing costs, taxes, and insurance that you pay along the way too. So the total out of pocket at the very bottom, that includes all of the costs to close plus the down payment. And you can use kind of a rough estimate when you're figuring out the costs that it might be, the closing costs and the taxes and insurance and, everything that goes into buying a house. It's usually somewhere around like 3% of the purchase price or so, in addition to whatever your down payment is. And again, this just reiterates your down payment, and that can typically be anywhere from 3% to 20% down. Can also be as little as no money down, depending on the loan program, right? Then we also talked about the closing costs and the prepaid items, and that's going to include everything your lender's doing, everything your attorney's doing, appraisal, home inspection, credit report, right? Everything that comes into play when you buy a house. You also want to check in with your realtor and see how your realtor commission is going to be paid. There's different ways that can be structured when it comes time to actually making your offer. And keep in mind, if you're wondering about ways to cover the down payment and closing costs, there are some options here. So there could be potentially the seller could help you out with a seller closing cost credit. There may be down payment assistance programs available. Maybe you have gifts from family, or you have retirement accounts to pull from, or maybe even your employer has a down payment assistance program for housing. So everything just to kind of get the wheels turning when it comes to thinking about saving to buy your home. Again, there are plenty of lower down payment loan options, especially for first-time home buyers. So these are some of the types that we would review. And again, some of them are as little as no money down or very little down. And it's all going to depend on your buyer profile, right? So what are your credit scores? What's your income as far as what you're eligible for doing? And also the property too. Some of these programs have restrictions as far as the type of property you're buying, like a single family versus a multifamily. And some have restrictions as far as the location of the property or the condition of the property. So our job, again, on the lending side of the puzzle, is to sort out, based on your needs and based on your financials, what makes the most sense for you. Once you're pre-approved and while you're looking for a house, and also while you're under contract on a house, the general rule of thumb is just keep everything the same. So keep doing all the great things that you've been doing, right? Keep paying your bills on time. Keep using all your accounts like you normally would. Keep working all of the regular hours that you work at your job. If anything is going to change at all or does change for you when it comes to your income, employment, assets, credit history, anything like that, tell your loan officer. Do not try to hide anything from us, because our job, the reason we do such a thorough pre-approval is that we want to make sure once you're under contract and you go through a mortgage underwriting process, which is like almost like an audit that's required to be done, that you pass that with flying colors and there's no questions, and that you can smoothly get through to owning your home. So don't miss any debt payments. Don't open or close any new accounts. Try not to quit your job or change your jobs. Don't deposit cash in your bank account. Cash is not a good thing when it comes to buying a house. Everything has to be traceable. So basically, again, just keep doing everything the same. And if you have questions or changes or anything, just let your loan officer know. Once it's time to search for a house, you want to work with a realtor who you're comfortable with, who's professional, who's familiar with the area and the type of house that you're looking in. You want to make sure that they understand your goals and that you really give them some clear guidelines so that you can be most efficient in where you're looking and what houses you're looking at. They're going to set you up with so many great tools and resources when you're working with a buyer's agent, so that you know when houses are available and you can get in. And especially in this market with low inventory, it's really, really great when you can get to see that house ahead of the curve. Your realtor is going to want a copy of the pre-approval letter that we have so that they know your parameters when it comes to financing. And we all work together. So when your realtor is helping you to craft and send your offer into the seller, they may call us for different strategies. They may want an updated pre-approval letter. Sometimes even the listing agent calls us to make sure that everything on your pre-approval letter is valid. So again, it's really important to have a team that can jive and work together and is in your corner on your behalf. Making an offer on a home. So this is actually a sample offer to purchase form. And when it comes time and you want to submit your offer, your realtor will help you fill this out. And typically the seller has a day or two to get back to you as to whether or not they're going to accept your offer or if they're going to counter offer or anything like that. Talk to your realtor, because they're going to be a wealth of resource for you when it comes to learning all about making offers on a home. There's all different strategies, again, especially now where it's a little more of a seller's market and you may be going and bidding on a house that has multiple offers coming in. So your realtor will help you craft the best offer based on what they know of the seller's needs. And this is going to include the property, the price you're offering, the down payment you're offering, the timeline as far as when you're going to be closing. And it's also going to include any contingencies or conditions that have to be met in order for you to buy the house. So this contract protects you so that different things have to happen, like the house. You may have a home inspection. You want to make sure that when your attorney looks at the ownership records, it has clear title, which means that you can own the house free and clear without any issues. You're going to have a mortgage protection, a mortgage contingency. So if anything were to go wrong with your mortgage, you're protected and you don't have to buy the house. So this purchase and sale agreement or offer form is really, really important, and your realtor will help you to complete that. Once you're under contract, a typical time frame is that your offer gets accepted. You usually have the first 2 weeks to kind of get everything in order. So that's when you'd bring in a home inspector. You would do your formal mortgage application. We'd have an appraisal of the property done. You'd hire your attorney who's going to go through and again, go through the ownership history on the house for you. And then later on down the road, you would set up your homeowners insurance. And when all the due diligence is done, we'd issue a mortgage commitment and then you can close. Typical closing time frame is usually around like 5 weeks. It can happen slower, it can happen faster. It really just depends on your needs and the seller's needs. A lot of people wonder what the difference between an appraisal and a home inspection is. So the home inspection, you really complete on your own behalf for your own purposes. Most mortgage programs don't actually require a home inspection, but it's an important thing to have done because that's what's telling you about the structure and safety of the home and the condition of the property, and also anticipating any future repairs. The appraisal is really more about the value of the house. So the appraiser is going to look at some making sure that it's structurally sound, utilities work, that there's no safety issues or anything. But really, they're not going through with as much of a fine-tooth comb as the inspector is, because they're making sure that the value is sufficient enough for us to put a mortgage on the property. Once all the paperwork's done, the appraisal's done, title exam's done, underwriting has finished all their questions, that means we're finally ready to close. The mortgage commitment date is sort of the dotting all the I's, crossing all the T's, the date that we're ready to go. And actually, all you have to do from there is just pack your things and get ready for the closing day. The closing day is when you actually own the home. So that's when you do the final walkthrough of the property. You're going to meet at your attorney's office, sign all the paperwork. You'd bring in any remaining money that's due toward the down payment or closing costs. And when your attorney actually records the deed and the mortgage at the registry, that's when the house is officially yours and you get to move in. So that concludes our overview of the beginning steps of the process on how to get pre-approved and the brief overview of what happens when you're actually under contract. Again, getting started is just a conversation with myself or my team. We'll talk about your goals. We'll talk about your financials. We can even do a soft credit check, which doesn't impact your credit scores. So there's really no reason not to get started on the planning side of things. You can meet us in person. You can call us. We can do a Zoom. We can email. You can find our website. We're on all the social media accounts, right? So whatever is best for you, we can meet you there. And I just want to say thanks so much for listening today. Again, you get a $250 credit should you be able to work with us this year on your mortgage. Feel free to pass this along to anybody else who is interested in learning more about mortgages. We do these monthly webinars frequently, and you can also find more information on our newsletter or again on any of our digital media sites. We really hope to get to chat with you soon and to get you to help you with your house. Thanks so much for listening.